Good day to one and all. This is Dr. Sivaraman of iknowindices.com. I'm going to present now the Asian session live market analysis and the forecast review part. I gave the forecast on 28th of November, the start of the week on Monday. And today we are on 2nd of December. Between 5 and 5:30 GMT, I'll try to review the forecast what I have given and also try to explain to you what could happen today being the last day of this week. Besides, how exactly the market is expected to react for that of the non-farm payroll. I'll be also giving the spike trade call webinar before and after that of non-farm payroll. So anyhow, I'll briefly touch upon that and give you more details during the spike trade call webinar. Those who are interested to contact me, you can contact me using my email, dr@i-knowindices.com, or the Skype chat ID if you want to instantaneously get some suggestions and advice with regard to the trades. iknowindices@hotmail.com is the ID for my Skype chat. You can contact me using that. And there won't be any charges for these things, and I'll be glad to help you, make you to understand how exactly the market is expected to behave, and accordingly you can plan. But most of the traders who lose the money in the market because of over trading, assuming that they have enough equity without understanding how the leverage is going to act against them, they commit too many positions and later on suffer. So even though they use the hedge, they are not able to come out because of over trading. In such a situation, we should be able to accept the loss when it is small. So try to close some of the excess positions so that we will be having lesser positions to handle at a given time. Later on, by taking fresh positions, you can earn back the lost money. So it is very easy for anybody to lose the money. To get back, we cannot do it in one stroke. We may have to do several trades to get it. Because of our emotions, we get trapped or entangled with regard to the market. Again, if you become emotional, then it is extremely difficult for us to come out of it successfully. So why I'm telling this? Because this is the time during which you find during the monthly trend reversal and the yearly trend reversal, predominant of the traders lose their accounts because the players make very big upside and the downside move as a one-sided move, and they always try to make the unexpected moves in the market. As a result, the traders get really trapped. And actually the players do this during that of the month end and the year end time, mainly in order to earn as much as possible for their investments and for their principals. So that is why the players are very, very aggressive in making whipsaw moves in the market. So in such a situation, we can only do swing trades, take only one position, book profit, and afterwards think of another position. And if you are not able to keep stop at entry in a position, or if the position is consistently making loss for 2 hours, you close the position and review the market and re-enter into the market and trying to earn back the lost money in the event if the hedging facility is not available. These are all some of the essential informations one need to understand during that of the yearly trend reversal time. In the month of December, we will come across huge upside and the downside moves, and that will also continue during the month of January of the new year. This, the players do it in order to earn maximum profit by liquidating most of their positions and then create an imaginary bearish feel in the market during the month of January and February and try to accumulate as much positions as possible. And every year, if you look into the chart, for during the month of January, February, sometime up to March, we'll come across the market will be very, very bearish. And you'll find Euro and GBP might go to the unimaginary lower levels. And this is how the players do it. And later on, by the month of September, October, they reach the peak and offload all their buy positions. This is the yearly program of the players. So we need to know the yearly program of the players. Besides, we need to also know their monthly and the weekly programs. The weekly forecast I have given it here, and besides the monthly forecast is they are expected to make the volatile moves during that of the last week of the month and the first week of the new month. And in this particular week, 28th November to 2nd of December, the month of November gets over and the new month of December starts. In a matter of 5 days, they have to make all the big moves. Normally what happens, there will be a last week of November, then the first week of December. So 2 weeks they will have the chance to make volatile moves to first liquidate all their positions and ascertain the profit, and later on create bearish field and enter into the market. But in 5 days time, they have 5 trading days, they are expected to make all such moves what they are known to make it in 10 days. So obviously the moves will be very aggressive. Besides, we'll come across the following weeks also, they are expected to make very volatile moves as the yearly trend reversal moves. So knowingly or unknowingly, the players make such moves in the market because the traders also become very greedy in order to act in a very funny way by just going for over trading. So because of the over trading, the traders also get vulnerably trapped. It is not only with regard to the small traders, even the institutions, some of the major institutions and the banks, they overcommit positions without understanding that they are going to be trapped. Why they do it? Because they would have been underperforming for many months. In order to compensate and try to earn as much as possible to compensate their normal earning, they try to overcome it without understanding that they are making emotional trades. So once they make such emotional trades, they expect the market to be bearish, when suddenly the players spike up and then they go in for a short covering. Then the players think that the traders think that the market might continue the uptrend, but suddenly the players drop the market. So this sort of uncertainty they try to create in the market during the month of December and January. One has to be very, very careful while doing trades. So don't think of any position trade during this time. Only swing trades are possible. That too when the market is very active. So during the early and the late sessions, when sorry, when they make very quick upward stop and above that of the high, or very quick downward stop and below that of the low, watch for about 30 minutes and see that the new low, they are not breaching it for 30 minutes. Then try to take a buy position. You'll be able to quickly book profit during the upward move. So this is very essential for you to understand and be a smart trader. And when the players are here to aggressively trap the traders, also understand they are also emotional. So if you also in the emotional state, then obviously there will be an emotional clash, and then you find in the aggressive fight the money power wins. So that is why you come across many of the traders lose their account and the account become uncontrollable, etc. And they don't realize that they can calmly wait and understand the situation and later on enter into the market or continue the trade using the hedging. But unfortunately, the emotional traders continue to be emotional and imagine about the future, fail to understand how the positions are to be handled at a given time. So this is the main setback of predominant of the traders. Because of that, they lose the account. Now, as far as Friday is concerned, they had just done the quick gaining move and the drop alternatively in this week. And now you find that they gained the levels, dip and rise during that of the Japanese session. And you have seen that GBP has come to the higher level for the week. And also Euro has just breached the high set for the week. And you find that USDN also rise to 114 level. So all extreme levels they are showing in all these currencies, and they dropped in a big way Australian dollar to that of the weekly low. So in the case of Canadian dollar also, they had dropped it to that of the week low. So they are making contrarian moves. You can understand how they are making contrarian move here. The majors are showing the USD weakening move. Euro and GBP showing positive net change, and USD Yen and USD CHF showing negative net change. But USD CAD and Australian dollar are showing the negative net change as a contrarian move. That means the players are at the moment handling that of the commodity crosses. Then after handling the commodity crosses, they will come to that of the yen and yen crosses, and later on the majors, and finally the European crosses. In this way, in a single day, they will handle the currencies, and that will be very, very volatile because you come across non-farm payroll release during this day. Now coming to the levels in which the currencies are expected to swing. In the case of Euro, the estimated low was 1.06, but they came down to 1.0553 and then started gaining the level. And now they just breached 1.0685 and gone to 90 and holding there near that of the weekly high. Then in the case of GBP, again they made the downward move for another 50 pips below than the 40 pips below than the estimated low, and then they started gaining to 1.26 and 1.2616. They set it as a high, and they are continuously gaining. And in the case of yen, they just went up to 114.83 yesterday, and today they are going to handle Euro and GBP. That is why they handled USD yen yesterday, and they are expected to make a big drop in USD yen. The low they are set is 111.36, and they could just make further downward move during that of the after that of the release of the non-farm payroll, etc. Then in the case of CHF, they are expected to come down to 0.98, but they just hold above that of the parity and went up to 1.02 level and started dropping another 50 pips above that of the estimated, mathematically estimated high. Then in the case of Canadian dollar, they just currently come down to 1.3287. The estimated low was 1.32. The estimated high was 1.3525, and they went up to 3538 and then started coming down. And in the case of Australian dollar, 73.74, they are set it 74 was the estimated low. They came down another 50 pips below, and now they are expected to gain again for some time and then drop. So they will be doing lower level consolidation in the case of Australian dollar in order to handle the commodity crosses. So now you find in the case of the majors and the commodity pairs, they just made only a narrow range swings in all, excepting USDN. There it's about 300 pips. Otherwise, they are just doing about 200 pips or 150 pips moves in all. So they are just consolidating again in a narrow range. Now coming to the other market trading, Euro set the low 1.0657. That has not been breached. 1.0677 is the high. They set around 3:30 GMT, but they breached it and went up to 1.0690, and they are holding there. As I explained, that they are expected to make swing and rise during that of the Japanese session and make one upward move during the early part of the European session and hold high And after the data release, non-farm payroll release, they are expected to make a sudden drop in the market and then start gaining the level during the US session as a normal firming up move. Then GBP, the low is 1.2571 and the high is initial high was 1.2601. They went up to 1.2616 and they are holding high to make further upward move and then later on make the drop after the non-farm payroll. Then in the case of USD-Yen, 113.59 is the low, 114.19 is the high. It appears it's making range-bound move and they are expected to hold around 114 when Euro and GBP are gaining, and then later on they are expected to make a sudden drop during the European session in the case of USD-Yen. Then afterwards they will drop Euro and GBP after the non-farm payroll, and so that Yen crosses will make a very big drop, and this is the way they handle it. No, and later on during the US session, Euro and GBP could slowly gain. USD-Yen could make for the downward move as an unexpected move, even though the non-farm payroll is expected to be more than expected. Then, in the case of CHF, 1.0096 was the initial low. They just breached it by 3 pips to form 1.0093 as the new low. The high is intact, 1.0109. They are making a small consolidation here, not much of a spread between the high and the low. In the case of Canadian dollar, 1.3287 is the low, 1.3319 is the high. They are not breached the low of the high. And Australian dollar, 0.7412 was the initial low. They just breached and came down to 74.05. 74.33 is the high. So they are likely to make a brief downward move before making a rise following Euro and GBP. Normally, you know that the commodity pairs lead the rally during the early part of the week. During the late part of the week, they just make it opposite. So this way they handle all the commodity crosses. Those who are handling or those who are trading in the case of Aussie crosses, Aussie with Euro, Aussie with GBP, etc., they should understand the plans of the players. So during the early part of the week, they will be making Australian dollar stronger when compared to that of Euro and GBP. And later on, during the later part of the week, they will make Australian dollar weaker when compared to that of Euro and GBP. Accordingly, Euro GBP cross will initially make a drop. Euro Aussie and GBP Aussie will make an initial drop during early part of the week, and later on they will gain more during the fag end of the week. Now the recommended trades for today. So I do not want the traders to take now positions, and I expect you to take the positions when they are making a quick downward and the upward moves in the market. And they are expected to make about 100 pips swing in the case of Euro and GBP. When they make an upward stop and above 1.07, you can take a sell, and then they are expected to make a drop. After that, the non-farm payroll to 1.06. At the time, you can book profit. Then, similarly, you can take a buy and book profit during the year session. And in this case of GBP, they will make a quick drop in the case of after that of non-farm payroll, and then they are expected to gain the levels. At the time, you can book profit. In the case of USD-Yen, when they are making upward stop and above that of 114, you can take a sell and keep hedge order to limit the risk. And once they quickly drop, keep stop at entry and trail the stop to maximize the profit. You know that two levels, they make a very quick drop of 50-100 pips, and then suddenly they will reverse. In the case of USD-Yen, because of lesser volume If you keep any limit order, sometimes it might get filled or sometimes it may not fill. So you have to use invariably the trailing stop in a profit making position, so that the trailing stop will get you the maximum profit when they are making a quick downward move and then reverse and start making an upward move. So you have to be smart enough. When the players are trying to do tricks, you have to understand the trick and try to see that you are able to capture profit during such moves in the market. So these are all the session timings, what I have been showing. You can just follow how exactly the market is doing it. Now, I'll come on Monday, 5th of December and give the forecast for the next week. And again, it is going to be a very volatile week, 5th to 9th of December. Then today by 11 GMT, before that of the non-farm payroll, I will give the spike trade call. I will recommend the calls. You can try to in a demo trading platform, the spike trade call. And during that of the quick moves, you can book profit around the recommended levels. And 14:30 GMT, I'll come back again and review the call, what I had given it before that of the non-farm payroll. The results I will discuss, how exactly we have made the profit in the trades, and then subsequently I will review how the players are expected to continue the move during that of the US session. So if you've got any doubt, kindly ask me. I'm willing to answer those questions. Brent has got a question here. I know you said that the players handle 2 pairs at a time, but up to how many pips do they usually handle during the false move and data release time? See, during that of the false move, they come up to that of the low and reverse, or up to that of the high and reverse. So whatever the spread they have done it. So up to the high, they come and then reverse if it is a false move. And if it is the data release time, depends upon the trader's pending position. Normally, for a data release, the minimal move could be about 75 pips. Suppose if it is US GDP or any other data, etc. And since non-farm payroll is coming by Friday, a lot of traders might be holding the open positions. So in such a situation, they could try to explore the possibility of the weekly net change level. So they could gain in the net change about 150 pips or drop about 150 pips. That is the normal rate. And you know the weekly limit in the case of euro is 350 pips. We follow it from the start of the week, that is last Friday close time. How much of pips they are just gained and dropped, you'll be able to understand that they can do only maximum 350 pips in the case of euro, and 600 pips in the case of GBP, and 450 pips in the case of USD and USD CHF and Canadian dollar, and 300 pips in the case of Australian dollar. Then also, would it be safe to trade the crosses the same way you have shown before, since you said they will be very volatile? Yes, crosses will also be very volatile. In order to do a very effective trading in the case of crosses, you need to follow the majors which are contributing the most to that of the cross. Now, for example, you have euro here and you wanted to trade euro yen cross. Then euro is currently around that of the near that of the high. USD is also near that of the high. So you will find that euro yen will be near that of the high. And you see that euro does not breach the high or just make only a stop and near that of the high. And USD is also making a stop and near that of the high. You will find that euro yen will also be making an upward stop and. At the time, if you take a sell position and keep the hedge order 50 pips away, And once a position start making profit of 25 pips, keep stop at entry and eliminate the risk of losing money. Then later on, you will find that when euro is making a drop or GBP is, sorry, USD yen is making a drop, then euro yen will come down. Then later on, you will find that when they drop euro also, you will come across massive drop in the case of euro yen. At that time, once they stop cutting the new low in the case of euro, new low in the case of USD yen, new low in the case of euro yen, for 30 minutes, book profit. If you follow this technique carefully, you'll be able to earn nicely in while trading crosses. You have to practice in a demo trading account. And simply, if you divert your mind looking into the charts, you will never be in a position to close it. You only focus on the live market quote page and see how exactly they are near that of the low and not breach the low, near that of the high and not breach the high. And during that of the early or the late sessions or the mid sessions, especially in the case of crosses, they will just make an upward or the downward stop. And during mid sessions, early part of the mid session or the late part of the mid session, at that time, you try to enter and exit. So suppose you enter during that of the mid-European session a position, try to close it during that of the mid-US session by watching the moves. So, do you do an analysis on gold and non-farm payroll roll 2? It's usually a false move also. Yes, in the case of gold also they make the false move, and what they have done it in the case of gold, they have made the drop in the market. And see, they went up to 1,300 and made upward extended stop and then started making a drop to 1,200 and now slightly below and things like that. This is mainly to make a wide range swings, and so normally they do it for 2-3 times, about 100 pips move. So $100 move. So they make an upward move, book profit and drop and buy again, and make an upward move, book profit and drop again. So if they do 303 times, then what happened? 300 points they will earn. Then afterwards, they will continue to rise, so that when it comes to 1,300, people might start selling, thinking that there is going to be the wide range. Then the traders will be trapped and they rise it to 1,400 and offload their buy positions. Because even though they are buying it at 1,350, 1,375, still with the profit what they have earned by doing the churning move for 3 times. So when they rise it higher with their profit, still their buy position will be below the market level. So in the event of any crisis or any knee-jerk reaction happening in the market, suddenly somebody passes away and things like that, and that they don't have a control. So in such a situation, they will simply offload all their positions. Still, they will not incur loss. If they don't do that, they will lose their number 1, number 2 position in the richest of the world. So keep it in mind. The players are here to make money from that of the market, and they are least bothered about the rest of the thing. So once people become greedy, they don't mind killing as many people as possible in order to conquer a land. What they will do with the land? In those days, those empires we are seeing, like Alexander, he wants to conquer the entire world. What he has achieved out of that? Nothing. But it is only a question of the mindset, thinking that everything should be belonging to him. And what is the use? If the entire world belongs to me, what I can do with that? No, there is no value, because if I say that, okay, the world is so many trillions of dollars, there should be somebody to buy it. Only then it has got a value for it. And these unfortunate emotional people think that with the money they can buy everything in the world, but they cannot buy peace of mind. That is why they have sleepless nights. Any other question? Okay, if there are no questions, then I will come back by 11 GMT and give a pre-non-farm payroll data release call, and we will see how exactly the calls have matured by 14:30 GMT. Wish you all happy trading and try to eliminate the market fear by expecting the unexpected. That way, you should be able to use the contingency plan and earn money from the other market during either way volatile moves. Wish you all the best in your trades. See you by 11 GMT.